Mag 7, which really is more the Mag 3 right now, driving earnings. But the Mag 7 is now back to a record 30.8% of the S&P 500 index. So for every dollar that goes into a passive index fund, 30.8 cents of that is going into the Mag 7 companies. They also now make up a record of 22.3% of forward earnings expectations. So for every dollars of earnings that's coming in, 7 companies are making up nearly 1/5 of the entire earnings of the S&P 500. And this is going to lead us right into what you need to know before the bell this morning. Economists are now expecting a very sharp pickup in economic growth as we move into the end of the year. So we had this kind of early weakness in the economy because of pre-tariff front loading, etc. Now that that's expected to be behind us, even though we now have more news from the administration about tariffs on copper, aluminum, steel, everything else, we've got these tariffs that are coming back now. And particularly if we don't have trade deals done before August 1st, the tariff deadline will end and tariffs will go back up again. So even with that threat there of higher tariffs, economists are now looking past that and saying, yeah, we're going to have a lot stronger growth into the end of the year, which is kind of interesting because that's the premise that is needed to support expectations for much stronger earnings growth, which is what analysts are currently expecting for the rest of this year. In fact, markets did rally a bit yesterday, still kind of, very near all-time highs here. So the exuberance there certainly is being supported by the markets. And as we go into earnings season here, starting really this week and next week, they're expecting very strong earnings reports to help support valuations where we're currently trading. So again, valuations are elevated, and in order to justify those more elevated valuations, we need much stronger earnings growth expectations. And already we're starting to now see Wall Street analysts starting to ratchet up year-end estimates. 6,900 is now becoming a realistic target for a lot of analysts by the end of this year. So again, we're at 62. So there's a very big kind of bullish sentiment starting to kind of build up in the market. Sentiment is increasing fairly sharply here. Risk appetite indicators are rising rather rapidly here. So again, getting a lot of exuberance back into the market, which in and of itself is a little bit of a caution sign because markets are very, very overbought. But the other big news yesterday was Nvidia, which became the first $4 trillion company ever on record. So the first $1 trillion company was Apple. The first $2 trillion company was Apple. The first $3 trillion company was Apple. The first $4 trillion company was Nvidia. And what's interesting about Nvidia is that you don't have to go too far back to remember this conversation where, Nvidia is dead, right? DeepSeek is going to kill Nvidia. Nvidia is going to lose the footing. Nobody's buying their chips. So all those narratives, right? Nvidia is dead, and well, it's not dead. It's back to all-time highs here. It's had an extremely strong rally from these lows, again, becoming the first $4 trillion company ever on record. So again, this is kind of always the narrative is that when there are leaders in the markets, and right now this is an important concept. The Mag 7, which really is more the Mag 3 right now, driving earnings. But the Mag 7 is now back to a record 30.8% of the S&P 500 index. So for every dollar that goes into a passive index fund, 30.8 cents of that is going into the Mag 7 companies. They also now make up a record of 22.3% of forward earnings expectations. So for every dollars of earnings that's coming in, 7 companies are making up nearly 1/5 of the entire earnings of the S&P 500. So again, that's helping support the prices of these companies. But we've heard this narrative over and over again over the last couple of years. Nvidia's dead, AI's dead, DeepSeek's going to kill AI, nobody wants AI, AI's a fad. But yet these stocks continue to perform and they're continuing to grow. Now look, there's a lot riding now because of where Nvidia is trading on their earnings report, but that earnings report isn't for another month. So they're very late to report. But again, Keep a watch on the Nvidia. It's very overbought here, very extended. We're going to get some type of corrective action. Stock could pull back to 130, 137 pretty easily here. Just any type of news or disappointment in the markets in general, you're going to get a pullback here. But that'll probably be a good opportunity to add to the position, not because their leadership position in AI is not going away anytime soon, and they're being supported by that large position chunk in the S&P 500 itself. So every time somebody buys those passive indexes, goes right into the stock. All right, that's what you need to know before the bell this morning.